Well, hello, everyone. Cynthia Tomain with Interactive Brokers, and thank you for joining today's webinar being brought to us by BCMstrategy on how to trade the markets. We're very pleased to have with us Barbara Matthews as founder and CEO of BCMstrategy Incorporated, a startup company using patented technology to quantify public policy risk. Prior to becoming a technology entrepreneur, Ms. Matthews has a distinguished career at the forefront of innovation regarding geopolitical and financial regulation policy globally. She's had the honor of serving as first U.S. Treasury attaché to the European Union with Senate-confirmed diplomatic rank of Minister Counselor. Barbara has also served as senior counsel to the House Financial Services Committee under the leadership of Chairman Michael G. Oxley. She was also the first banking advisor and regulatory counsel to the Institute of International Finance Incorporated, where she worked directly with chief risk officers, chief executive officers, and the leadership of the Basel Committee on Banking Supervision regarding derivatives, regulation, cross-border supervision, and regulatory capital policy. So we are very pleased to have with us here this afternoon Barbara C. Matthews. So without further delay, Barbara, I'm going to go ahead and pass you the controls. If you could share your screen, let's get underway here this afternoon. Thanks for joining us, Barbara.
Thank you very much, Cynthia, and thank you to Interactive Brokers for this opportunity. I have clicked on Share My Screen, and Cynthia, can you confirm that everyone can see the slides?
We're seeing your slides, and you also have that audience view in your control panel.
Marvelous.
So let's get underway. Thanks, Barbara.
Thank you very much. And we will start, of course, with the mandatory disclosures that accompany this slide deck and or communications associated with the investing process. Having absorbed that, we can then go on to the agenda. We're going to hit three big areas. One, identifying the challenge and kind of unpacking the challenge of looking at a range of unstructured verbal and data, what that looks like, why it's important to put some structure around that. We're going to then build off of the popular blog series that we have been contributing to Interactive Brokers for the better part of this year. Kind of reordered the sequence of the rules to first focus on how to identify actionable data from the news stream, and then how to use the policy data in order to generate alpha or, at a minimum, minimize your exposure to headline risk and loss related to headline risk and volatility. Let's jump right in with the sources of headline risk. Very few people on the line will be surprised to see this graphic. In fact, my guess is my experience is that when people see this slide, often they want to add additional sources of unstructured data that contribute to daily volatility in the news cycle. I could only fit these in. But the biggest point is that at every step during your day, from the moment that you wake up and start checking in with your electronic devices to the end of your day, as an investing professional, you are hammered by headline risk. And the experience, whether it is through multiple screens on your desktop or whether it is just, talking to people, it can feel very chaotic. And because there is no single way to acquire this information or absorb it, this leads many in the trading markets to believe that policy risk is random. And what we're going to talk about today is that it isn't random. In fact, the technology frontier today provides the opportunity to put structure around this otherwise chaotic process, to understand it, to organize it, to see trends developing and to then start thinking strategically. I want you to consider that public policy risk and market risk are really twin separated at first. They are really not too different. And this insight actually occurred to me when I went from the private sector into government. So when I worked on Capitol Hill, kind of mid-career, it occurred to me that policy risk and the process of crafting policy was very similar to how markets operate. In both instances, they're prone to volatility, things coming out of left field. Precedent can guide quite a lot of behavior until at some point it doesn't. Momentum shifts, when they occur, can be abrupt. The new data in the policy risk arena usually is driven by the news cycle, but not always. Sometimes it can be an economic data point. Participants in the policy process, like their counterparts in the capital markets, are obsessed with detail. No small detail, no small footnote, no small loophole is too small to be strategically significant. And significant advantages accrue to the first movers. And now the first mover advantage in the capital markets will obviously tend to be the first one in or out of a trade based on new information, whereas the first mover in the policy risk context will usually be the person who helped broker a deal. While much information in the policy risk arena may not be public, the reality is that when policymakers act, and they act every day, everything that they do becomes public. And when it becomes public, it becomes actionable. And so the challenge is to identify when publicly available information from the policy risk arena is ready for consumption and analysis in the market risk arena. Now, this obviously is not terribly new. Algorithmic traders and bots have been automating execution based on headlines for quite some time now. But what I'm talking about is going beyond looking at the headlines in order to identify actionable data from the policy process itself, from the words the policymakers use. And at the back end, by the way, I will talk a little bit about how we do that at BCMstrategy. But right now, what I want to do is focus on the first principles. And the first one, it's the golden rule of policy analysis. And this applies to anybody analyzing policy, no matter where they sit: capital markets, advocacy, journalists, all people interacting with the policy process need to follow rule number one: be objective. And that can be incredibly hard to implement, because policy is very normative, and the language of policy can be very emotional. People have strong beliefs often as to what is literally right and wrong, legal or not. And so when you interact with the news process or the public policy process, even if it's not in the headlines, it's important to put your emotions in check. Typically, denial and disbelief are the biggest drivers of incorrect decisions based on a policy. And concretely, the best example for that, and we'll go through it in a little while, is Brexit. Very few people will say Brexit is a good idea. And if you spend a lot of time reacting emotionally to it, you may miss an inflection point in the capital markets that is important for your portfolio position. The same is true for surprise and its corollary justification. If you spend a lot of time kind of shaking your head saying, oh my God, I cannot believe they did X, or trying to prove to somebody in conversation that whatever it was important and justified, you're wasting time because you're missing an inflection point. And then the last part of it is what we call the lemming effect. And that would be when you hear Well, everybody thinks, fill in the blank. Well, it is important at this stage to understand who that everyone might be. Is it the crowd? Is it a crowd of informed participants? Is it everyone authorized to make a decision? If instead the answer is, well, all the op-eds and all the bloggers think this is wrong, right, sure to happen, etc., it's important to take a step back and think objectively about whether, in fact, everyone is right. In order to get to objective and transparent data, the key then is to identify what your data feeds need to be. And here, most people ask me, well, don't you mean I need direct access to the news feeds at Interactive Brokers, Bloomberg, Thomson Reuters, et cetera, et cetera? I'm going to suggest instead that the answer to that is yes, but there's a better, more advanced way to access the data that is important to the public policy process. And this draws from rules 4 and 9 in the blog series. And these slides are interactive, so that if you click on those links, I'll take you directly to the blog post. So the first part of that is very self-explanatory. It's traditional data. You already use it. GDP data, PMI, trade flow data, that's structured. It already exists. The next part of that at the frontier of technology is what people call alternative data. And that's basically all the data that's generated by machines, but it is profoundly habit data. It is not terribly different from a lot of the data currently collected by insurance companies, bankers, to assess their credit risk or to assess the insurance risk. It's habit data. How much do you exercise? Geolocation data can be very controversial, but it within certain legal bounds in the United States especially, it is absolutely usable. And even as we head out toward the end of the spectrum, new combinations of data. This is machine learning, artificial intelligence. You put in your traditional data points. You put in maybe your IoT-generated data from the motor vehicles. And you're trusting machine learning, artificial intelligence to identify unanticipated correlations or to identify new data points in combinations that didn't exist before, which is also very useful. But it's not language data. So all of that is really taking one set of structured data and delivering it in another structured way. At BCMstrategy Inc., we look at the news cycle as full of data that is not just machine generated. It is generated by translating language into numbers. And this is the big technological breakthrough in the last couple of years. Natural language processing has made it possible for machines to ingest language and spit out structured data. To the extent that you're familiar with this area, this is where a lot of sentiment analysis comes into play. However, what we don't do at BCMstrategy Inc. is look at sentiment, because what we're interested in is the language itself. So when we look at and convert the words of the policy process into language, this is what it looks like. And this is what Rule 10 is all about, distinguishing rhetoric from action. Many people are familiar with the concept that policymakers are all talk and no action. Sometimes that is true. Sometimes, however, the rhetoric also provides leading indicators of the direction that a policymaker may want to take. It may be a trial balloon. It may be he or she is looking to get some sense of feedback and market reaction. So if you have a technology like we do, which is patented, I might add, that translates and analyzes automatically the words from the policy process and identifies how much of it is rhetoric, how much of it is action, how much of it is a data release, how much of it is a leak to the media. And on this particular day, there wasn't any of the fifth category, but the fifth category is probably the most random of the components, judicial activity. When you look at the news cycle in this way, so this slide shows you all of the activity in the last 24 hours between October 1st and October 2nd for 4 broad categories of policy globally in English. On that particular day, the most amount of action was actually in banking rather than Brexit or trade, which may seem counterintuitive on occasion because Brexit and trade tend to dominate news headlines when other things aren't at the top of the fold. But this tells you where the momentum is. This tells you where all the activity is. And if activity is large, but your news feeds are all in a different area, that already is a red flag to you. The policymakers are doing things that the media has not yet picked up on. As a trader, that is gold because it is immediately actionable. It is in the public domain, but it may not yet have been noticed. Brexit is a very good example here. This is a time series. So we not only translate the language of data into structured quantitative components analytically, but we save it. And when we save it, it delivers a time series. And not only does it deliver a time series, but the time series shows you the reaction function between action and rhetoric in particular. For interpreting this data, as an aside, it's important to note here that when action outpaces rhetoric, so in this slide, at the end of September, it was heading there. Right? Spoiler alert, I can tell you right now we have crossed that threshold. Policymakers are now acting far more than they are talking, believe it or not, when it comes to Brexit. And so that tells you an inflection point is coming. The importance here is in order to trade the news, you don't just need the automatic execution engine used by algorithmic traders. You need to be able to think about and see behind the headline because the headlines can be misleading. And policymakers have become very savvy in crafting their talking. They always have been savvy, but they have become more savvy about not just crafting talking points, but identifying what kind of headline they would like to see. And sometimes the headline is not exactly accurate in terms of what is going on. So the other component to this data is it's not just the headline that we're translating everything that the public policy process delivers publicly. So it is comprehensive. Using that policy data requires identifying policy momentum. And this chart will show you what policy momentum looks like after the fact. But of course, when you're in the thick of it, it can be hard to identify exactly what kind of momentum you have going, which is why we have this daily chart. So with this daily chart in mind, aggregate volume activity levels, we come to rule number 2. The trend is your friend. In the markets, you know this instinctively. You know that if you are going to be on the wrong side of market momentum, you better have a darn good reason for it. A corollary applies in the policy risk concept. You don't have to agree with the policy trend. You may think that the policy trend is, and it can be stupid, it can be wrong, it can be disastrous, it can, pick any adjective from the headlines. The point is that if you know the path you're on, if you know the trend, then you know how to position your portfolio in relation to that trend. So that requires some strategy, and Rule 3 provides some, the blog post provides some concrete examples on what it means to be strategic. But the big point is that it is completely analogous to the capital market strategy process. If you see a trend heading in a particular direction regarding trade policy, tax policy, Brexit policy, you may shake your head and think these guys in government are crazy. They do not know what they're doing to the markets. And that may be true, but in the meantime, you can ensure that your portfolio is insulated because your positions won't be hammered if they actually end up doing this action that you think is not the smartest. Related to that is to be relentless. And this plays into the obsession with detail that exists not just in the capital markets, but in the policy process itself. There really is no substitute for being relentless and searching out information. This has been true in the capital markets for as long as anyone can remember. If you think about how Lloyd's of London became the preeminent insurer in the globe, and it was because the insurance agents set up shop in London near the docks so that they would have the best information about and the fastest information about the shipments and about the trading patterns. Being relentless has driven every application of communications technology in the capital markets, from the ticker tape to the Bloomberg machine to the algorithmic trading, automatic execution bots, and now to the translation of policy language into structured data. There is no publicly available information which is useless. Some of it may be more relevant than others, but in order to understand where you are in the process, you've got to be relentless in capturing and finding that data. Momentum looks very different on a day-to-day basis. So we have here two scan dates. The first one is May 10, and the second one is August 7. And I chose those deliberately, not just because they show radically different placement of which policy issue was most active on that day. But I also chose it because you'll see on the left-hand scale, the aggregate amount of activity changes day to day as well. So even if you've got a lot of activity, it will surprise not a lot of people that in August, aggregate activity levels are lower than they would be, say, in May. People are on vacation, and that goes for the policy process as well. It will not surprise anyone to know that, of course, when action occurs in August, because so few people are around, typically that action can be strategically significant. If you haven't caught that, this is about being relentless. If you have not caught that activity in August, you may be surprised in the second week of September when something kicks in. So tracking it every day is essential. Tracking the momentum every day is essential. These two charts show Brexit and trade policy swapping position as the most active of the day. If we were to backtrack or backtest and have a look at the headlines, I'm pretty confident that the headline traffic or even the Google search results on those days would not exactly match this activity, because we are capturing information from the source. We are not relying on the news media to generate all of our data. And if you've got questions along the way, you can type them into the dialog box. And if I see them in time, I can answer them on the fly. but I can certainly come back to the questions at the end of the presentation. Another example for what momentum can look like is in the trade war context. Very much in the news, very significant for portfolio positioning in multiple sectors, not just FX, but of course in agriculture and commodities. And it will surprise not a lot of people to see a ton of rhetoric regarding trade war and not a lot of action. In this case, the action, of course, is far more important. One action in trade war, the raising of a tariff, for example, can generate quite a lot of economic impact. And the reality is that policymakers will talk and threaten trade war before they act on it. Very few policymakers wake up one day after not having used the term trade war, after not having talked about tariffs for months, and suddenly act. This slide will show you where we are, where we were at the end of September, heading into the big WTO Airbus decision. The steady downward slope of the rhetoric is not surprising, as people expected the WTO decision to come down, as people exited the UN General Assembly. All of the air around trade wars started to dissipate. The WTO decision last week changed that dynamic. So if we played this momentum song again with the October time series added in, you would see the momentum trending in this direction as well. So the momentum is great to know, but how do you identify the inflection points? We've got 3 very concrete suggestions here as well. The most important of which is 8, nowcasting. And most of you on the call, if you follow at all the economic profession, you know how nowcasting operates. Nowcasting is basically a flash estimate drawn from current data. Basically says, based on where we are right now, the following consequences are likely. That discipline can be applied to every new data point generated from the public policy process. Because now, of course, we've got structured data to play with. And when we've got structured data about the public policy process, suddenly nowcasting becomes feasible. A few suggestions for how to think about nowcasting in the public policy process, which are particular to policy risk. The first of which is to align your time horizons. And I know that sounds basic, but you'd be surprised how many people don't think about this. Public policy risk always spikes before major meetings. And those are G20 meetings, those are ECOFIN European Finance Minister meetings, which occur monthly. Obviously, the monetary policy meetings at the major global central banks. But the policy meetings occur with not just regularity, but typically are publicly available. So all you need to do is align your options expiration date with a meeting to understand how the rhetoric, how the actions going into a meeting and coming out of a meeting may affect market behavior. The other very important part about nowcasting is that because it is very much point-in-time activity, it's important to revisit your portfolio assumptions daily as new facts come into the picture from the policy process. This goes hand in hand with being relentless, of course. In order to revisit those assumptions, you've got to have access to the information in order to see whether you need to reevaluate the thesis supporting your position or your portfolio. And drawing on the classic disclaimer, past performance does not always indicate future results. This is absolutely the case. because we rely on nowcasting, because we were relying on current policy activity, what it really means is that we're not relying on historical information. It is not the case in public policy when you can rely on precedent. In fact, I would recommend against it. It is much more important to understand where you are at any given day and plan from there, rather than rely on the concept that, well, it has always been done a certain way. The business of policy is to identify new trajectories, identify new actions, take a different path. That's the job. It's not the purpose. The purpose is slightly different, but the job is to do that. And how do they do that? They do that by agreeing on language. And that is true at the municipal level, at the state level, at a federal level, and it is true internationally. Policy moves forward based on incremental shifts in language. So past language won't necessarily be as valuable as the language being used right now in the last, say, month. Rule 7 and 10 then set up a hierarchy. All activity from the official sector is really not the same. Some is more concrete than others. Some activity is more nuanced. We look at not just the headlines, but we look at everything, all of the language that policymakers present publicly to deliver actionable data. And that requires a little segregation. That requires identifying what type of activity is concrete action, what type of activity is actually rhetoric. In other words, they're just blowing off steam, they are just issuing talking points. They're not really going to do whatever it is that they're talking about. And then leaks. Leaks can be very tricky. It is true that leaks can be headline generators, and they can be very important. But the thing about a leak is that it's not concrete. We have a whole blog post just on leaks. The big point here for the moment is that a leak may not actually be indicative of a policy direction. And it can actually provide an inflection point for policy to change. I know more than one trader that was of the opinion leaks were the best thing ever for identifying actionable intelligence from the policy process. It's a little more nuanced than that. So if this is a space that you're operating in and that you find compelling, I encourage you to read these 3 rules, 8, 7, and 10, all together in one sitting, because it puts it together in a way that helps tease out the components of activity that can be the most reliable indicators to you for forward action. Let's talk about inflection points in that context, because this time series for cryptocurrency regulation during the month of September illustrates it very nicely. As it happened during the month of September, we didn't have any leaks and we didn't have any data releases, so it's a nice, clean chart. And this illustrates the value of providing structured data from the policy language. The function here is a pure reaction function, and you can see it beautifully. Policymakers act, and the media starts reporting on it. And then, people chatter about it, and they talk about it quite a lot. And then policymakers act again, and then people notice, and the rhetoric goes up again. And then a big meeting occurs. So the 4 red circles on this slide pinpoint very specific meetings that were very important in the cryptocurrency regulation context during the month of September. During the month of September, and I'm going to go backwards actually in time because you're probably quite intrigued by that nearly parabolic green line. I'll just remind you to look at the scale on the left and see that activity levels are not terribly high. on the right, all of that activity is from one meeting in Paris. The OECD held a major multi-day conference and practically summit on blockchain, which included half a dozen central bank governors. Not a lot of media covered that, but that was a boatload of activity. Also in September, under the auspices of the Group of Seven, and held in Basel at the Bank for International Settlements building, we had the major stablecoin issuers, three of them, meeting to discuss a broad range of policy issues raised by stablecoin issuance. And at the same time, the policymakers released a working paper. They released some research identifying how blockchain could be used to generate automated compliance utilities within not just the cryptocurrency context, but broadly. You end up with three big spikes of activity, three big meetings, and this is the rhythm for cryptocurrency. When you look at the data in this way, it becomes much easier to identify the rhythm of a policy trend, the direction of a policy trend, and the activity points. The same is true for Nowcasting. And here I take a significant inflection point in the Brexit universe. The red circle in the Brexit area shows you the precise moment in time when action outpaced rhetoric. We wrote a whole blog post on this as well, by the way. But the significant part here is the policymakers were taking action on Brexit much more than was being reported. And the distribution of activity was significantly diversified across policymakers. In other words, it was not just policymakers in London acting. At that particular moment in time, actually, policymakers in Europe were putting into place a range of regulations, rules, and standards that would become automatic at the moment Brexit were to occur. And if you recall, back in February, the expected deadline for Brexit was the end of March. Deadline moved, of course, but this illustrates beautifully the value of nowcasting. If you can identify when policymakers are taking a lot of action that isn't being covered in the media, but it's publicly available, you can position your portfolios very strategically to maximize alpha generation and to maximize your insulation from headline risk. If anyone wants to go back at the back end of this webinar and ask some questions about all of the activity that was going on in that area at that particular moment in time, I'm happy to unpack that. But I want to make sure to cover the rest of the presentation first. The key takeaways here are the policy risk can and should be measured. It is not a random walk through the policy process. And while it may seem some policymakers in particular are unpredictable or random in what they do and say, it may suggest to you that the vast majority are not volatile, unpredictable, or random, not only in their activities, but in their words. And I know from having been inside the policy process, policymakers actually think very long and hard about exactly which words they are going to use before they use them. Technology makes it possible to measure that. This is the frontier of knowledge technology where we are right now. It's very exciting, and it provides the opportunity to make better decisions based on concrete information rather than the gossip cycle. Access to that advanced technology can minimize your exposure to headline risk, and it can increase your operational efficiencies as well as increase strategic opportunities in the way that I've described here. And again, I can always answer questions along the way. Using this data in Nowcasting generates predictive analytics that can provide strategic advantages to investors when applied to public policy risk. Why do you get operational efficiencies? As crazy as it sounds, when you have 20 different screens in front of you showing you news feeds, finding a way to convert all of those words on all of your terminals, plus your email newsletters, etc., means the information is actually more accessible. The information acquisition process for the public policy activity becomes not just faster, but better, because you are seeing things that missed a journalist's attention. You aren't scanning headlines anymore. You're not scrolling through your email digests. You're not seeing basically echo chamber journalism drive your perspective on what happened. You're actually accessing the core data, the core activity. You can treat public policy data just like any other data point, like a GDP number or a PMI number or a trade flow number. And the minute you've done that, you increase your operational efficiency. It gives you more time to undertake high-value analysis regarding policy momentum and conceptual correlations. And that drives better strategic decisions. You're making strategic decisions about a portfolio or a position using concrete data that is transparent and objective. I did not show that screen. Our data is transparent. You can click on any one of those lines or charts and see the individual components that were used to deliver that measurement for that day or that time series. I have skipped across the surface of a lot of content that is available through the Interactive Brokers universe and through my own company's website. The three big portals to access them are an online course. We've got a 10-part How to Trade the News set of videos with tests and quizzes to drill into a lot of the details. We contribute to the Traders Insight blog. At the beginning of the year, we contributed the top 10 rules. Going forward, we will provide periodic case studies. And then twice a week on my own company's blog, we provide perspective on a range of public policy data issues that generate, we think is going to generate quite a lot of disruption in how people view policy intelligence. And then maybe I should have started this, but I didn't. I closed with it to talk about what we do. So we use patented technology to provide investors and executives with transparent, objective data from the public policy process. The goal is really for people to make better decisions faster and better than their competitors, rather than reacting with emotion. We do have a small pilot program underway. We'll probably close it out at the end of the year. If anyone on this call is interested in more information about the pilot program in particular, please do let us know so that we can include you in the early testing. So that is the end of the formal presentation. We do have one big announcement. We've got a press release. We just finalized an agreement with Interactive Brokers to make our research available to the Insight platforms at Interactive Brokers. And Cynthia, while people think about putting together some questions, do you maybe want to walk them through where they can find the research in the Interactive Brokers universe?
Well, certainly, Barbara, and thank you. By the way, before I do take, or while I take over the controls, I want you to remember there is a questions panel. If you've got any questions for Barbara, located, notice the control panel on the right-hand side of your screen. If you've got questions, simply double-click that title bar, enter your question, and Barbara will be back to answer those questions. So,
oh, wait, actually, yeah, actually, I've got a question right here that.
Okay.
Someone is, I'm going to summarize it. Someone is asking me about the recently released research last month that showed that tweets from a particular U.S. policymaker, the president, tends to move markets fairly reliably and generate volatility. And I've been asking, what do you think about that? And the short answer to that is that, of course, rhetoric is going to move the markets. This is as good a time as any to talk about the lemming effect. And it's not just with this policymaker, but with any policymaker. Policymakers will say a lot of things, and part of the reason why they say things before they make decisions is to see how people will react. It's a trial balloon. So does it surprise me that there's an immediate market reaction? No, of course not. I think the more interesting research, however, is whether the market stays in that space after they have unpacked what was said and after they have realized that sometimes there is nothing there. And before you take back the controls, I want to go back to trade war. So rhetoric, this is policy rhetoric. And by the way, our data only reflects what policymakers are saying and doing. So rhetoric does not include, random bloggers and opinion pieces and such. It's really just what policymakers are saying and doing. If you see that policymakers are talking a lot, banging the war drum, if you will, but in the next 48 to 72 hours, you do not see implementing action, then it tells you that it's just rhetoric. In the United States, which is a good example here, a president can say anything about trade policy. But in order actually to impose a tariff, there is a definable process, and a public proposal needs to be made. So the fact that something is said is important, but it's even more important to understand within the next couple of days whether implementing action has occurred. The research that was released was pretty intuitive, and not surprising to anyone that a policymaker's words can move markets. But the question is not, will the words move markets? I think the question is, are policymakers acting on their words? And that's what we are showing here and all the other data that we provide. We track the action. Are they doing what they said they would do? Are they doing something different than what they may be saying they want to do? Understanding that dynamic is more important for a strategic investor. If you want to capitalize on the bump in volatility, if you want to capitalize on an individual trend, that's one thing. But for strategic investors that understand headlines and headline risk are often quite transitory, then this is a better way of looking at the news cycle rather than reacting emotionally to the talking point of the day. Cynthia, did you want to show where to find
I was
the...
just waiting for you to finish, Barbara, and what I will do is take the controls back for just a moment, and while any additional, I see some questions have come in, but I do want to show you where you can access Barbara's information on the Interactive Broker website. Now, notice you'll see on your screen, I've just brought up our homepage here and did want to point out some of the topics that Barbara had been mentioning. Notice if you do go into our education menu, there's several selections here that Barbara mentioned. Notice that we do have Traders Academy, which is where you can find a course that Barbara has provided. Notice once we get into the Traders Academy course, underneath the trading aspect here, you'll find, and let me scroll down, Trading the News. So notice that information is available, and you can log in. You will have to create an ID and simply log in and go through those courses whenever it's convenient for you. Now, in addition to these predefined courses, also want to point out, once again, underneath the education menu, you'll find our Traders Insight blog. This is our corporate blog that's available, and notice once we do get to this website, you'll find underneath the contributors, I'm going to go over here, and then you'll see alphabetical listings, and we do have Barbara Matthews BCM Strategies listed here. So notice these are separate articles. You'll see these are all clickable links where you can go into the various rules that Barbara has been discussing. Now, I also do want to point out, let's go back to the Interactive Broker website. You'll find, and it's actually under our pricing menu. As Barbara mentioned, a press release is going out today about the integration with BCM strategies and the Interactive Broker platform. It's not yet listed here, but you'll be able to find the information. Notice I'm going to go into the pricing menu, and you'll find research and news. Now, here is where you'll be able to locate Barbara's information, and you'll find, as with all of these, there is a free trial period. Once you do access the information, there's a 30-day free trial period that's available. You'll be able to learn more using the buttons that are included at the bottom of each page. We are a little bit, we're jumping the gun here a little bit because this is not yet listed on our website, but should be out there within the next week. So please do monitor all of the information that appears on this screen. And then I also want to mention the education menu and the webinar section. Now, since we have been recording today, you'll all be able to access those recorded information, both today's recorded playback and the webinar notes that are available, simply going into view the recorded webinars. Now, this one here will be posted later today where you can access the recording, and the slides are available on that notes section as well. So I did want you to see that we've got quite a bit of information now showing up on the Interactive Broker website. So with that, I see a few more questions have come in. So Barbara, I'm going to pass those presenter controls back over to you. If you could share your slideshow once again, and then go into the remaining questions. Thanks, Barbara. Back to you.
Thank you very much, Cynthia. All right, so there's a couple of categories of questions. One is about the data itself, and one is about the products. And I'll take care of the products first because that's a little easier. So someone asked what the pilot project is compared to the research. So the research that will be listed through the workstation is a monthly quantitative analysis of macro trends in fintech policy globally in multiple sectors: banking, payments, cryptocurrency, insurance. And then there's a weekly analysis of cryptocurrency payments and electronic currencies, central bank digital currencies. So in those two areas, we do the analysis, and we provide it both on our website and through your workstation. But that's different from the pilot program. And I guess I did move through that a little quickly, and so it's probably good to unpack that a little. The pilot program instead is providing to a range of market participants and other strategy professionals direct access to the data. So in the pilot program, 2 to 4 people at an institution or a firm can receive these charts and have unlimited time series generation activity to support scenario analysis. It's an early stage product. We are a startup company. We're not doing enterprise level deployments just yet, but we do welcome diversity of users into the pilot program. So if what you really want is to see this data every day, and you want the ability to think about scenario analysis in this manner, that's really what the pilot program is for, to make that available at an early stage to people who can really use it and who need it now. And given we're heading into a presidential election year next year, we've got a lot of geopolitical uncertainty. It's as many people as can use it is probably good. We've got about 5 minutes left on the call, and so I'm going to choose a question about the data itself, because someone asked about the difference between this data and sentiment analysis. It's very important to understand that this is not about sentiment. It is not about feeling. It is not about whether somebody is positive or negative about a particular policy. This is objective. And because it is objective, it means we at BCMstrategy are not corrupting the data with our view on what is a good or a bad outcome. In fact, at the beginning of this year, I did have someone who asked me if we could graft that into our data, and I said no. The point is not to provide normative analysis inside the data on whether a particular trend is a good one or a bad one. The reality is that you can position yourself a lot of different ways in connection with any policy trend. So our job is not to tell you if this is a good thing or a bad thing for the universe, for the world, for the country, or even for a particular stock. That's not what we're doing. What we're doing is providing the data to you so that you can make a better decision with more information than has been available in the market up to now. I'm confident that there might be more questions on that topic alone, but I don't want to get much more into it because I realize that we're close to the end of the session and I don't want to run over time.
Okay, well, with that, I want to thank Barbara Matthews and BCMstrategy for bringing us today's webinar, with a reminder that all of you will receive a direct link to today's recorded playback and to the slides that Barbara's been discussing later on this afternoon. So if you do want to come back and review the concepts she's discussed, simply watch your email later on today. Also want to thank all of you for participating in our webinar. We do know that it has taken some of your time, and we appreciate your interest. So with that, we are going to conclude our session today. You can all exit using the X in the upper right-hand corner. Have a great day, rest of your day, everyone, and thanks for participating. Have a good one, all.
Thank you very much. Bye-bye.